Greetings and welcome to the ROI Clear podcast. My name is Ray Hightower, and today we are joined by Mr. Grant Reaves. Grant Reaves is managing director and co-founder of Stoic Equity Partners. We're going to drill down into exactly what he's doing in commercial real estate. We'll talk about his experience in brokerage, and we'll talk about some of the things that drive his career and his desire to do good in this world. Ladies and gentlemen, please join me in welcoming Mr. Grant Reaves. Welcome, Grant.
Thank you. Thank you for having me today. Look forward to having our conversation.
Yes, absolutely. Absolutely. We're looking forward to that as well. Let's kick things off. Normally, we kick things off with an elevator pitch. And for those who are new to the ROI Clear podcast, Grant Reaves is on an elevator with someone he wants to influence. So, Grant, we're going to ask you, what would you say to that person, someone you want to influence, in the course of an elevator ride?
So I would say that my name is Grant Reaves. I'm co-founder of Stoic Equity Partners. We are a commercial real estate investment firm that specializes in value-add flex industrial properties throughout the Southeast, with a focus on secondary and tertiary markets.
Wonderful. And at this point, you exchange cards and a new business relationship is born.
Exactly.
Tell us about flex industrial, because your background, I know that you've done business with other asset classes. Tell us about your choice to focus on flex industrial.
Yeah. And so as you mentioned, so I started out in the brokerage world with kind of a regional firm that we did a little bit of all asset classes. So I've actually done pretty much any of the major food groups. I've done some small multi, some office, all that kind of stuff. But got pretty specialized into hospitality throughout my brokerage career. And that was really where I spent most of my time, is selling hospitality deals throughout the country with Marcus and Millichap, which Ray, we were chatting before this. So we're both good Marcus and Millichap alum. And so then had a lot of experience in hospitality. But then when we started Stoic in 2020, 2021, we actually started off in the self-storage space. We're located on the Gulf Coast. And so there's a lot of high growth markets around here, a lot of housing coming in. So we wanted to kind of play in that. So we got into the self-storage world there. But we pretty quickly saw self-storage getting, frankly, really, really hot and really into a place where we were having a hard time making numbers work. And then we started seeing rates kind of go through the roof. And when both those things happened, it was hard to make deals work for us when we were at 4 to 5% interest rates. When our bank debt went to 7 to 8, we just couldn't make a pencil. So early 2022, we really drilled in and started looking at the landscape, and our basis, just like most people's basis in investing, is a supply and demand basis, right? And so we started looking at assets that had not been built, but were in high growth markets that just had a lot of runway on rental growth and didn't have anybody currently coming on top and adding new supply. We ended up in the flex industrial world. So flex industrial is multi-tenant office warehouse complexes. So we're buying buildings that are, say, 50,000 to 150,000 square feet total, and made up of maybe 25 to 5,000 square foot little office warehouse suites throughout. So these are located in business parks. Usually our kind of typical build out will be, say, a 5,000 square foot unit, maybe has 1,500 square feet of office and 3,500 square feet of warehouse is kind of our typical deal. But yeah, it's been a great asset class for us. I mean, while we're there, like I said, it's supply demand. Nobody's built much of this product the past 20, 30 years. Current rents do not support new construction in most markets we play in. So we're kind of in an insulated market where we don't have anybody coming in on top of us. And so we're able to drive rents. We're buying from primarily more mom and pop owners, legacy owners, that maybe have $5, $6 rents, and we're able to push them to 8 to 12. And so it's a really great little value add play for us.
Wonderful. And you know what, I'm listening to you, it seems that throughout your career, you have pursued blue oceans. You were in one ocean, that ocean turned red. And so you started pursuing a blue ocean. And for those who, many of our listeners are certainly aware of the blue ocean strategy, the idea that the red ocean is where the sharks are fighting and the ocean is red from blood from everybody competing. But if you're going after a blue ocean where there's no one else there, you are going into the land of opportunity, or the ocean of opportunity, we should say.
Completely agree. I mean, I think finding small niches that you can exploit rather than competing against really large institutional owners is usually a pretty good place to be. That's also why we invest in kind of smaller secondary and almost tertiary markets. Our typical geographic location will be, say, 500 to $1.5 million, 2 million in MSA. So we're not really playing in like the Nashvilles, the South Floridas, the Austin, Texases, the Dallas Fort Worth. Those are great markets. but we want to make sure that we're in a market where we feel like we have a competitive advantage, and we don't want to go into a market where we're competing against, I'm just making up a name, but Blackstone, to be able to buy this flex industrial portfolio. We'd rather go in and buy it from somebody who built it in the late 90s, and we're able to find good yield going in. And we don't mind kind of playing in the smaller markets to find that.
Right. You identify those markets that are crazy competitive. You avoid those. You go after markets where you can provide a service.
Yeah.
Yeah.
And you can buy in place yield, right? Like we're buying stuff that you can have positive cash flow. I mean, we look at a lot of deals in these really high growth markets, and they're great, and the stories are great. There's tons of people moving there. I get it, but if it's obvious to everyone, while a market's great, it probably doesn't have a lot of yield sitting there. I mean, you kind of have to have a little bit more of an inside baseball look at things, right? So like everyone knows that South Florida is blowing and going. It probably means there's not a lot of yield there going in. That's kind of how we look at things.
Right. Everybody knows about it. If you're in an Uber and the Uber driver is giving you real estate advice, that's probably not a market you want to go after because everybody knows it.
Exactly. So we like to fly a little bit under the radar and find small niches that we can be able to exploit and be able to drive value for investors, right? So
yes,
that's what we're doing.
How did you develop that investment philosophy? Because listening to you, it sounds extremely well reasoned and extremely insightful. You don't just wake up one morning and have that. What steps did you take to develop that thought process and that way of thinking?
Yeah, I mean, I think it really came from my brokerage career. So like we were based in a small market on the Alabama Gulf Coast. We're in between Mobile and Pensacola. And so right on the coast. And so we're in kind of a smaller market already. I was always an independent agent for the most part, and it wasn't part of like one of the huge teams that you see at Marcus Millichap or anything like that. So frankly, I was always kind of playing on that as those outskirts. I was always playing in the smaller tertiary markets where I knew I could find good product and give good brokerage services to people that might be a little bit overlooked just because they weren't an institutional owner. So I mean, I kind of noticed early on that you have the large brokerage shops out of the tier one markets, and they're working with the tier one institutional owners, but there's a lot of owner operators, and I'm just making up names here, but Auburn, Alabama, or Columbus, Georgia, or something like that you can go in there and find good product to sell for people. And so that was always kind of my strategy. My business partner, Jeremy, he was a broker as well. He was kind of the same way. He wasn't calling on the huge REITs to sell triple net retail stuff. He was finding the smaller developer that maybe is doing 3 to 4 deals a year that he could give really good service to. And so it kind of just that's how we've always looked at it. We always played in these markets when it was brokers. We understand them. We understand the demand generators of these smaller markets and how you have to look at them and the risk reward kind of structure of them. So yeah, it was really came from our brokerage world though. Yeah, it was really how we got started in that, and it's been successful for us. We like it. Feel comfortable with it.
Now you mentioned your partner Jeremy. How did that partnership come to be?
Yeah, so Jeremy was a institutional bond trader for years in Memphis, Tennessee, and ended up on the Alabama Gulf Coast throughout the recession, and ended up in commercial real estate brokerage as I was. And so we were both working for a regional firm here on the Gulf Coast called Bellator Commercial, and we were kind of a little bit of generalist. I was still selling primarily hotels at that time. Jeremy was doing triple net retail primarily, and we broke or kind of went our separate ways, I guess, in 2017. That's when I went to Marcus Millichap. Jeremy went and started his own shops, continuing to do triple net retail and some local development stuff. And then in COVID, or right before COVID, really, I guess it would be like early 2020. I had spent all of 2019 reading every book I could, watching every YouTube video I could on the LP-GP relationship. Like, how do you raise money? How does that structure look? Like, where, how to underwrite these deals. Like, I knew how to underwrite as a broker, but like learning how to underwrite as an owner operator, or as a PE shop. And so I identified this little like 8-unit multi-deal. And Jeremy also had a decent amount of construction knowledge. And so I called him one day and I was like, hey, how much do these HVACs cost? And he's like, what are you doing? And I was like, I'm going to buy this multi-deal. And like, I just explained to him what I was doing. And he was like, well, don't do that. I have another building. Let's go after this one together instead. And he has great real estate knowledge and great construction knowledge. I had spent a lot of time kind of learning the structuring side and the LPGP side. And so we decided to team up on our first building. It was an office building in March of 2020. And our plan was just to put it under contract, get the tenant to renew their lease, and then flip out of it for a much lower cap rate. So while we were under contract, like the first week we met with them was like March 15th or something like that. And they're like, yeah, we'd love to extend our lease. We had it under contract like a 10 cap. So like our idea was like, get them to sign like a 5-10 year lease. We'll sell it for like an 8 cap. Like then you have pretty good yield there, right?
Yes,
Well,
yes.
week by week, the meetings kept going on. And it was like, yeah, this work from home thing's working okay. So we'll see how that's going to go. And then it quickly went to like work from home is what we're doing going forward. And so we don't want to renew this lease anymore. So that was our first forte. We ended up buying that building a year later and turning it into self-storage.
Right.
But yeah,
Did the
that's
tenant
kind of how we
extend their
started.
lease as planned? Did that part of the plan? It did
No,
not. Okay.
no. So they ended up actually paying to get out of the lease. And so we dropped the deal, I guess, in like summer 2020 kind of time
Mm-hmm.
frame. And then somebody else had looked at it for self-storage and they ended up not wanting to do the deal because of construction prices. We're like, that's actually a really good idea. And so we put it back under contract, I'd say early 21. Negotiated with the tenant to pay us a pretty hefty chunk of cash to get out of their lease. And
Mm-hmm.
we bought the building. I think our basis in that building is like $2 million. It's on the corner of Main and Main. And it's been a good deal.
Wow.
Yeah.
I love that. The original idea was to buy it at a 10 cap, extend the lease, make some improvements perhaps, and then sell it at 8 cap,
Yeah.
solid lead, solid yield. But then COVID hit, so that was a little bit unexpected,
Yeah.
to say the least, to make an understatement somewhat. But so you pulled out of that deal, but then put it back under contract again when you spotted another opportunity there. This time it was self-storage. So again, you're looking at opportunities, kind of like if you're sailing, you can't control which way the wind is blowing, but you can trim your sails to make sure you take advantage of whichever way the wind is blowing.
100%. I think that's one of the biggest things to entrepreneurship in general, outside of real estate or whatever you're doing, is that it's always a fine line to make sure that you're staying the course and focusing on your niche, but also at the same time always looking for new opportunities. I mean, obviously you don't want to be a firm that jumps around and does different asset classes and it's kind of willy-nilly like, hey, we're gonna go do this, we're gonna go do that. But as new opportunities present themselves, it's wise to be able to kind of see that new wind coming and adjust your sails accordingly, be able to capture those trends.
Right.
Um, and really be able to weigh that. So, I mean, I always feel like that's a really fine line in entrepreneurship and making sure that you're staying focused on what you do and what you're really good at, but also kind of looking over here to make sure that you're not missing any major trends over on the side
Yep.
as well.
Yeah. Not missing any major trends. Important.
Yep.
When did you realize that you were an entrepreneur?
I kind of always was. So, did not finish college. I dropped out like halfway through because I just did. I mean, in retrospect, definitely should have finished. Would have definitely helped me. So, anybody that's listening out there, this is not an endorsement. Drop out of college. Definitely finish
Mm-hmm.
school. But always knew that I kind of wanted to go into business for myself. My family has a lot of entrepreneurs and different various businesses, so I kind of didn't ever see myself working a typical W-2 kind of career path. And so didn't really have any ideas, but just knew I wanted to do something different. And then fell into commercial real estate brokerage. Really after college didn't work out. I was working for a home builder and
Mm-hmm.
his wife was a realtor. And he was like, well, you should sell houses. And I did that for like 6 months, was not a good fit. And I was like 20 years old and it's just not a good fit.
Yeah.
And so then quickly found commercial real estate brokerage, which was a good career, was able to feed my entrepreneurial kind of spirit just because you're able to do and build what you want to build.
Mm.
And so yeah, it's been great. I really have always enjoyed it. It was never like a decision. It was just kind of like what I always felt like I would do ultimately.
You were drawn to it.
Yeah.
Yep. Excellent. All right. There we go.
Yeah.
Now, what is it that would you say drew you into commercial real estate? You said you did residential real estate briefly, a few houses that just didn't fit. What were
Yeah.
there certain parts of commercial real estate that drew you in? What was does it fit your personality? Is it the numbers you like? What is it? The
It's definitely the
personalities?
numbers. Yeah.
Yes.
So, I mean, now granted, again, I was not the best realtor. I was 20 years old and a guy from, that just gotten out of school kind of thing. So nothing against residential real estate by any means, but it's much more of an emotional sale. So if you're selling houses, it's a lot more of what you feel, what the area is, that kind of thing. And being able to have logical decision making through numbers in commercial real estate, and specifically investment commercial real estate, made a lot of sense to me. I like formulas, I like math, being able to put numbers together and say, hey, this deal works because X, Y, and Z. It's not that, hey, it doesn't work because your client maybe doesn't like the backyard, fencing. I don't know. I'm making something up, but
Yeah.
you know what I mean? So it's
The
much more
color of the door
logical.
locks or something.
Exactly. Exactly. It's much more
Yeah.
logical. It's much more numbers driven, which is just how I am as a person anyway. I'm just not a super emotionally in turn guy, so much more logical, numbers driven. So it just kind of fit my personality a lot better to go into commercial and really investment commercial real estate.
Got it. So you're in commercial real estate, investment commercial real estate. You somewhere in there, you make a decision to get together with Jeremy and you start a firm. Tell us about that decision.
Yeah, so really in 2019, it was one of those things where brokerage is great. It's a great way to make a great living. But I mean, you're in brokerage as well. You're always kind of, it's a transactional business to a certain degree. Like you're not, you're building a really great revenue source, but you either need to be investing that very well or somehow buying your own buildings. You're doing some way that you're actually building net worth and a structure as well around you. And so that was something I always looked at and wanted to get on the principal side, primarily just because you could build what I felt like a more of a real business around it, to where you have a staff that can run deals. You know, you have a portfolio, you have a lot more stability in that. And so we had always talked about getting on the principal side. We played around with it when we were younger brokers. And so it's just kind of more of a decision like, hey, I'm going to figure this thing out, raise some money and start doing some deals as well as my brokerage, just so I can have some exposure. Because I just, you know, when you're in brokerage, you can see a deal come by your desk. Like, man, this is great. This guy's gonna make a ton of money, and you can sell to somebody and then make a ton of money. And you're like, well, why didn't I do that? You know, and then you also figure out, one of the biggest things was when I first started, I was like, man, I could never be one of those owners. Like, they know everything. They, you know, everybody thinks that if you run a successful company, you know everything, which is not true. And I remember I had a couple of owners ask me things like, I was in the hotel space. And so like hotel owner operators, they know like their hotel space really well, but they're not like, they don't know everything about commercial real estate. A lot of times, like, they know their product, right? Just like anyone, right? Like, you're in multifamily, you know multifamily really well. Like, that's your thing. And I remember somebody asked me what a cap rate was, and this guy owned like $100 million in hotels, and he didn't know how a cap rate worked. I'm like, you know, it's not that hard. Like, anybody can figure this out. It was kind of like an eye-opening moment for me. I was like, I decide I'm gonna figure this out, and I'm gonna move forward with this. And so that was really 2019 when I decided to go learn about it and figure it out. And then it just happened to call Jeremy for some advice on some HVACs, and we decided to get together on it.
So one conversation about HVACs led to Jeremy saying, what are you doing? Why are you buying that deal? Why don't you buy this other deal over here? And
Exactly.
that took off from there. Wonderful. Now, what advice would you give to people, to entrepreneurs who are thinking about going into a partnership with someone else?
I definitely would start a little, like Jeremy and I started with the idea of like, hey, we'll go do this one deal together, but we'll continue to do stuff on our own kind of outside of that. I think that's really important. I mean, before you've done a deal with someone, or like say that you're gonna partner up with somebody, you're gonna start a private equity real estate shop like ours or something like that. Just go do a smaller deal with that person. Like, go co-GP a deal. Y'all go buy a $1 million, $2 million deal, raise some LP funds, and go see how it works really working with that person day to day. Before, I feel like sometimes partners kind of go into it like, we're 50-50 partners. We're going to be like that forever. Here's the name of our firm. Boom, done. And they've never actually done anything together. Like, working with that person through an active deal. I'm speaking specifically to real estate here, but like going through an active deal together, I think is really important. You figure out how people work, figure out people's work ethic, which is important. I think having similar work ethics is extremely important. You see all the time partnerships blow up because you have like one person that really likes to blow and go and work 60, 80 hours a week. And you have another person that maybe likes to be a little bit more life work balance kind of thing, which is great. And it's just different personalities. But those people are probably not going to get along super well if they're 50-50 partners. So making sure that you align on work ethic, align on kind of values overall. And the best way to do that is to do something together that's maybe not hitching your wagon forever to that person.
Yeah. Warren Buffett says that he looks for intelligence, integrity, and energy. And it sounds like you're saying that those all need to be aligned. So it seems that there's certainly some alliance, some alignment.
And we've been great partners. And fortunately, we knew each other for a really long time before. So he already knew the things that I do that make him annoyed, and vice versa, you know, because it's like a marriage, right? Like you spend more time with this person than anybody else. And so, yeah, I mean, it's been a really good partnership for us. But that would be my biggest piece of advice is try to do some sort of venture with that partner before you fully hit your wagon to that person.
So if it's like a marriage, you better date first.
Exactly. Same thing. You know, like, you don't get married the first date. You know, like, you got to spend some time together, make sure that works. And before making it official. Yeah. Good analogy.
Excellent. Now, on your background, you also share that you're a man of faith. You share that you're a member of Church of the Apostles Eastern Shore. And I was wondering if you could tell us a little bit, how does your faith influence your business life?
Well, I think it makes you have to take yourself a little bit less serious, right? Like if you
Mm,
believe that you're part of something larger, I'm not all that there is, right? Like this life is a temporary piece, and of adventure, and ultimately at the end of the day, what we do is very important, but there's also a lot of other very important things happening in the world. And me closing this Flex Industrial deal is not the most important thing for the world to keep turning. The world will keep turning. God's still in control. It's not all up to me. I'm not sitting here just, trying to run my ego and make sure that I'm the biggest and the best, and being able to kind of check yourself and kind of staying balanced on like what's really important, I think is a big driver for me.
that is a very healthy way to view the world.
Now,
God
granted, if
is
you talk
still
to my
in
wife, though,
control.
she'll be like, no, that guy works 80 hours a week and blows and goes all the time. So, like, it's definitely an aspirational thing that you have to remind yourself of, right? So, it's a good balance
Yes.
for me.
Truly aspirational. Yeah, yeah. We have this standard,
Mhm.
we read the Bible, we see what standard is set, and we aspire to that. We know that as humans, all of us have fallen short, but we continue to strive.
Exactly. Exactly. You
Continue
continue
to
to have something to work for and something to be able to base yourself on. I think is really important.
absolutely. Well, I could talk to you for a much longer time. There's so much that you have going on. Everything from, as you said, you've done business in all of the basic food groups of commercial real estate, and you're
Mhm.
focused on flex industrial, and you continually look for opportunities where there are blue oceans that you can target as opposed to being where everybody else is. You're looking for the next opportunity. That's exciting across the board. So it's all very exciting. As we wrap up,
Mhm.
as we wrap up, I was wondering if you could tell us about some of the books that you're reading, maybe some of the books you read in 2019 when you were figuring out how LPs and GPs fit together. What books are you reading, or what podcasts are you listening to keep yourself sharp and to keep yourself ahead in this game?
Yes, for sure. And let me look up this book real fast because I always suggest it, but I always get the name wrong. Um, uh, 1 second. Uh, I think investing in private equity real estate by Sean Cook
Mm,
is a great yeah. Investing in real estate private equity insider's guide by Sean Cook is a great overview of private equity real estate, LPGP relationships, funds, syndications, how that world works, fee structures, return structures, all that kind of stuff. I always suggest that to both LPs and GPs. If you're looking to get into the space, that's just a great quick read. Um, Capital Attractions, another one. I can't remember the name of that person who writes that, but they have a really just kind of a basis on raising money for small operators like we are.
mm-hmm,
On YouTube, I've watched a lot of the Break into CRE YouTube videos. I can't
mm-hmm,
remember that gentleman's name, but he has a lot of really good insight. Um, on the podcast world, there's so many great ones out here like yours, that you can be able to find different operators throughout the country and see how their strategies work and that kind of thing. Some of the larger ones, I like the Fort podcast is a good one that I listen to quite frequently, as well as the Tripwire podcast.
mm-hmm.
Tripwire, I don't feel like as many people know about that one, but that's a really good kind of macro look into more the institutional side of commercial real estate. They do a weekly podcast on the market that's really helpful. Um, but yeah, that is the great thing about the modern area that we live in, right? Like, yeah, I can sit in South Alabama and learn just about everything I can about investment commercial real estate through the internet. So yeah, YouTube's a great resource. There's so many good books out there. I'm sure I'm forgetting a few, but those are good ones to start with.
That's fine. That's an excellent list to start with. We'll make sure we include links to those in the show notes. And then finally, how can people get in touch with you?
Yeah, so our website is Stoic EP, so that's STOIC EP.com. My email is greaves at stoicep.com. And so that's GREAVES at STOICEP.com. That's the easiest way to get in touch with me. Always love to talk to people about running PE real estate firms, flex industrial, or anything else. So please reach out and ask away any questions that they might have. And always like to connect with people all over the country and the world. It's great.
Wonderful, wonderful. Grant Reaves, it has been a pleasure speaking with you today on the ROI Clear podcast. I wish you well, and I know we're going to have you back because you're always doing more and interesting things. So I'm very sure we're going to have you back one day.
Well, thank you. Thank you. No, it's been a great pleasure and really great meeting you, and look forward to talking to you next time.
Thank you for engaging the ROI Clear podcast. At ROI Clear, we buy multifamily apartment properties, we improve them, and we give people a great place to live. At the same time, we give investors an opportunity to enjoy capital preservation, tax advantages, and a solid return on investment. If you'd like to know more, click the link to roiclear.com down below. We look forward to speaking with you.